Should I buy or should I sell? Should I hold or should I dump? Should I fuck or not is the question of the day. If you've ever asked yourself that question, or if you've asked it to someone else, well, then this video is for you, because we're going over the topic of why you're likely taking much bigger losses than you should be, which will inevitably lead to the murdering of your trading account or investing account or whatever the hell you want to call it. This was actually spurned upon, or this idea for this video was spurned upon by a question in Discord here. It's actually a really, really good question by Skywalker in Discord. This is actually in the quant automation Discord, so you can get a quick little insight into this. But basically, she is asking, I believe she says, "Good day, everybody. Hope you're all well. Thanks for the well wishes. Now let's get to the fucking." On the topic of bags, I heard Krown speaking about checking the Bitcoin parent to see if some shitcoin has gone to its grave. Now the question is this: let's say total money invested or gambled, very accurate, was $15,000 in previous bull cycle. Doesn't really matter how much it was; it's all the same percentage-wise. But due to being a noob trader, someone ended up with bags of Phantom, CKE, Gala, and if she sold them today, then she would take a $7,000 loss. This right here is actually a really big symptom of a much greater problem, in the sense that, unfortunately, intuitively, we don't understand losses and opportunity costs like at face value typically. And I made this mistake as well when I first started trading, so I don't want to pick on this person too much. This is ultimately for the benefit of hopefully more people. Basically, your question boils down to, what should I do? Should I sell these off? Should I hold them in hopes that they go higher, or should I reallocate to somewhere else? So this question is a symptom of essentially not having a strategy. When you don't have a strategy, you are essentially doomed. Actually, that really is the short and narrow of it. So how do we deal with this? And then we'll go into like some very tactical ways to manage positions, and which essentially comes down to limiting losses to the point where we know that we're going to take losses. Any strategy, I'll even show you my working strategy right here. Any strategy is going to have a non-zero probability to take a loss on any particular trade, and so we need to make sure that that loss, if we want to optimize our profits, is going to be as small as possible. Which, how can we do that? We exit based off of some sort of predefined criteria, something tangible, something objective, that would essentially indicate to us that, hey, if this has happened, it's only going to get worse from here, and it's better to just take the loss now instead of holding on it and hoping and wishing and waiting. So you can see in this particular strategy, there is about a 34% probability that any singular trade is going to be a loser. But you can see that over time, the equity curve is pretty steady up and to the right. It's not perfect. No strategy in my experience is perfect. But, the main thing here is that when we take a loser, inevitably, it doesn't fucking murder our accounts. So first, let's get into why you don't know what to do. Why you don't know what to do is because you don't have a fucking plan. What does a plan come down to? It comes down to three things. It comes down to 1, entry, 2, exit, 3, risk management. We'll put that RM for short. If you don't have those three things defined before you enter into a trade or investment or whatever, you're gambling. You will lose money over time. Maybe not on that particular trade. You might get lucky. Definitely happens, especially during general bull markets. But over time, your expected value is zero, is to trend towards zero. Now, on top of this, what this person also is not considering here is that not only would she be taking a $7,000 loss, but she is completely missing out on the opportunity cost that this market has granted over the past year and a half of being mostly straight up for the, I guess, quality coins and especially new shit coins. So she alludes to some speech or speaking about that I've talked about, looking at altcoin versus Bitcoin pairings. This is essentially what gives you that information. You can look at Bitcoin as kind of like the index compared to everything else in crypto. It should be measured against Bitcoin. Bitcoin is like owning SPY in traditional markets or SPX in traditional markets. You get to own the major bourse. Everything should kind of be measured upon, based upon that. If you're doing better than that, awesome. You are winning. If you're doing worse than that, you're fucking up. And if you're just keeping pace with it, well, in my opinion, you're doing quite well. Anyways, going back into it right here, I do want to highlight some of the tickers that she was looking at, just to give an idea. So this is symbol GALA, Gala. This one saw its highs in 2021, as most things did, at about 90 cents almost, very close to a buck. And now it is trading at 3.5 cents or below 3.5 cents. The reason why this chart right here it looks terrible. This is a terrible chart, but why it's not truly reflective of how terribly shitty this is because we're on log scale. If we go to regular, that's the real chart. That's what it actually looks like. And this is something that was dead much long ago. So I'm guessing, based off of her question, that she probably, I'm gonna bring it back up here, she probably got it during the hype in late 2021 or early 2022, somewhere in this area right here, as did a lot of people in that prior cycle. And to be fair, if you are looking at it from this lens, you can actually make a decent case up until a very specific point that maybe Boolah Jesus is going to save your Angus. If you just pray hard enough and tell him that you promise you'll never make these absolutely terrible decisions yet again, and if he just bails you out this one time. However, in the case of especially long-term investments, a very simple way you can mitigate your losses and not get into the situation where you buy up here and now you're all the way down here is you can employ a very simple rule. That simple rule is to follow the weekly trend. So again, this is for longer term people, thinking like a year out or more. As long as the trend is up, okay, we can allocate, maybe we can even DCA, fine, whatever. But as soon as the trend goes to the downside, we do not want to be holding any more of this highly esteemed next generation asset that is going to save the whatever problem it's trying to do. I don't know what the fuck Gala is, just garbage probably. You should assume everything in this market is garbage, like at face value, until proven otherwise, because the percentage of legitimate projects that will ever do anything in this market is so small that you are going to make a lot more money betting on the other side or just not betting with it. Anyways, in this case, the weekly trend is your friend until it's not. And so what this person could have done, or if this person did have a rule related to their risk management, they could say, hey, I will take the loss now if the weekly trend goes to the downside because it's likely going to get much worse later, thus leading to a bigger loss. And in this case, this one enters into a true downtrend once it breaks this low and creates a new low. And that happened at 18 cents. Still would have been a terrible loss. That's really the problem with these shitcoins over here. And of course, you can apply this to any time frame, generally, if you're trend trading. But it saves you from, I don't know, going another like 99% down to 3.5 cents. So things are bad just from this look. Yes, indeed. Terrible. And this person, this person was new, and we've all gone through this. We don't want to pick on this person specifically because it's most people in my experience have made this mistake, and myself included, even multiple times, sadly enough. So this is bad enough as it is. Just having that simple rule could have saved them, from quite a severe, even greater markdown than what they did see. But things get even more interesting when you look at Gala versus Bitcoin. So now we want to think in terms of opportunity cost, because that person isn't just losing 70 or $7,000. What they're losing is the opportunity to be in what I consider the sort of index of this market, Bitcoin. And instead, they have lost, again, assuming they entered, somewhere in this region here, they've really lost another 90%. Because Bitcoin has gone up significantly within that time while this asset goes down. So you're getting killed on both ends. You're getting killed on the end that you are holding this 50% down asset. And then on the other end, you're getting killed because you could have been making I'm guessing again, they entered somewhere around here, about 3x, from that time. That's what you could have been making. Instead, you were hoping and praying on this without a real plan. And here's the thing, where I catch a lot of people is that, yeah, you need to have risk management set out in advance, obviously. But what you also need to have set out in advance is your profit taking. If you don't have all three of these things, entry, profit taking, and risk management, basically what it comes down to, or entry and exit, then you will inevitably run into these problems with optimization, especially. Now, this is why we do have, again, over here, referencing my own strategy, just very simplistic, in some cases, very, very simplistic ways of managing risk. For example, this strategy, if I go into the Krown Quant automation tool here, I just have a general stop loss at 3.99%. There's also another condition as well, by the way. So it is a little more complicated than that. But even just having something as simple as that based off of some sort of optimization of, in this case, the equity curve, that's going to help a lot. That is going to help a lot, actually. It's going to be certainly several steps up above having nothing, because if you have nothing, then you should expect nothing. That's what it comes down to. But yeah, going back into it right here, again, it's not just this chart, or it's not just this chart, Gala BTC. It's regular. I mean, it's even worse than that. So you're losing the money that you are from holding that asset. And then you're also stopping yourself from getting into an asset that could be making you money, or at least holding the line in terms of the index. And so that is the true issue that I see most new people kind of fall into, and what is the essence of these questions of what should I do? The reason why you have this issue is because you didn't have a plan. You didn't have a plan because you were just new. You just didn't know, probably. But if you have been here for a while, you have been taking these sort of, or making these sort of issues, that is the antidote to that issue. Now, of course, like I said, we have this tool over here, the Krown Quant automation, which is kind of a more advanced way of solving that issue. You basically have a bot trade for you. But also, of course, we also do have the crypto school starting up in about 2 weeks here, where we will actually go over a working system. I'll give you basically my own blueprint and my sort of philosophy of how price action works. And then from there, you can iterate on top of that, and you can essentially avoid that damn question, or ever getting into that situation of what should I do? The purpose of this program is to eradicate that for forever, because you're going to be predefining all of these metrics in objective ways beforehand. And it'll be as simple as saying, is this number 1 or 0? If it's 1, I do this. If it's 0, I do nothing. It's at the end of the day, it actually is that simple. The issue is getting in your own way, actually, which is part of trading psychology. But at the end of the day, when it comes to trading psychology, what's the real antidote anyways? It's having a plan. It all comes back to the same thing. So again, looking at this school right here, starts in about 14 days from the recording of this video. I don't know when this video will go out, but basically late June. There perhaps will be ones in the future as well, but for right now, spots are limited, and it is, it's a little bit of a trial run here. So we'll see how it goes. And I think that's perhaps where I'll leave off on this particular video. There will be a link to this one, as well as the quant automation features in the description below. And yeah, I think that's it. Again, have a fucking plan. Don't lose your account. You don't need to lose your account, hopefully, in order to learn that lesson like I have, because it fucking sucks. But again, the plan is your friend. Have some sort of objective region in the case of risk management that, if met, would indicate that things are going to get even worse. Why is trend so important? Because once trends are formed, they're more likely to continue than not. So in this case, if you're long-term allocated to an asset expecting upside, when the long-term, in this case a weekly time frame, says downside, time to get the fuck out, in a very simplistic way. So we'll end it right there. As always, I want to wish you the best. Take care, much love, and see you hopefully soon.